I think there's only three things that are relevant right now. Right? And here are the three things. The halving is coming with 100% certainty. And as far as I can see, most of the selling of Bitcoin in the market is the Bitcoin miners that have to sell in order to pay their electricity bills and pay their debt expenses and their operating expenses. So that amount of selling pressure is going to be cut in half in a few months. So we know that's coming. And then we know there's a spot Bitcoin ETF coming. And when that comes, we plug into Wall Street and the entire banking system. And then finally, we know that fair value accounting is coming. And when that happens, the objective will go away. And now you're going to introduce this as a conversation into hundreds of boardrooms. They will not move in a week. They move quarterly, but over the course of 12 quarters, you'll start to see company after company looking at this, and you'll start to see a reallocation of assets. Right? At the end of the day, corporations only hold two assets. They hold cash and they hold bonds. And so if Bitcoin is available as an asset, pari passu to a bond, then you'll see a reallocation from bonds to Bitcoin. And then in the institutional investor side, you've got all these people holding real estate, holding commodities, holding gold, holding ETFs and S&P indexes and the like. And if they start to reallocate, and they will, 1%, then 2%, then 5%, then you're going to have something that's never happened in the history of the world, which is you've got an ETF on a commodity that is scarce.
There are several major catalysts on the horizon for Bitcoin. These include the forthcoming FASB accounting changes set to take effect by the end of 2024, the Bitcoin halving scheduled for April 17, 2024, and the final deadlines for the Bitcoin ETF in the first quarter of 2024. Despite these positive catalysts, Bitcoin has been trading in a range between $25,000 and $30,000 for months, raising the question of who is selling. In his recent interview, Michael Saylor believes he has the answer. He argues that the primary sellers at the moment are Bitcoin miners. They cannot simply hold on to their Bitcoin. They have bills to pay, including electricity, computer costs, and operational expenses, which necessitates selling the Bitcoin they mine. The good news is that the selling pressure is expected to decrease significantly in just a few months. Specifically, on April 17, 2024, the day of the Bitcoin halving, the rewards for miners will be halved. Be sure to stay tuned until the end of the video, where Saylor discusses his personal Bitcoin strategy for MicroStrategy and shares his predictions.
Every other ETF in the world is on an asset that is not scarce. It's inflationary. You can make more buildings, you can make more real estate, you can make more gold, you can make more commodities, you can make $1 billion worth of any of those things. The underlying producers produce more of the asset to deflate or to depreciate the price. With Bitcoin, when $100 billion flows into the Bitcoin spot ETF, there won't be any ability for any producer to produce any more Bitcoin. And so you can't really compare it to the spot ETF of gold, because gold is an inflationary asset, and you can't compare it to ETFs on real estate or on bonds or on equity. You really have to say, this is the first time we ever plugged Wall Street into an asset that you cannot produce any more of. And so nobody knows what will happen, except that if you reason from first principles, you know that it's got to actually perform better than all the other asset ETFs because the underlying fundamentals are just better. But let me lay out three possible ways to invest in Bitcoin. One is you buy Bitcoin, the underlying asset. The second is you buy the spot ETF. The third is you buy MicroStrategy. Okay, so we talked about the headaches of buying Bitcoin, the underlying asset. You have to do it on a crypto exchange and put in place parallel custody, compliance, compensation, control systems. So that's the challenge of that. The closest thing, the most compelling idea for a plain vanilla Bitcoin investment of an institutional investor is you buy the spot ETF. You're getting the 1-to-1 correlation, for $1 million you put in, you're getting $1 million of Bitcoin. What's the positive? It's marginable, it's good collateral. I can buy it in a second, no money down. And I don't have to build parallel custody, control, compensation systems. So all of my problems are handled by Wall Street. What's the cost? 50 to 100 basis points a year. Okay, so if I charge you 1% a year over the course of 20 years or over the course of your lifetime, it means that kind of I take 20% of the money you invested at 1%. So there's a cost. 50 basis points means I get 10% of your money, approximately. So, but having said it all, I mean, I would pay you 50 to 100 basis points in order to be plugged into Wall Street. And it's not a problem. It's a lot better than the alternative, which is to rebuild all their systems and then finance themselves. So MicroStrategy is not that. MicroStrategy you could think of as a levered long Bitcoin company that pays you a yield. Okay, so I'm not going to call this an ETF, but because we're not a financial company, but we have $4.4 billion plus of Bitcoin and $2 billion plus of debt. So what we've done is we've levered the balance sheet with debt that costs us about 1.5% interest. Wow. So MicroStrategy takes advantage of its position as an operating company to do something that an ETF can't do. An ETF can't issue junk bonds. An ETF can't issue convertible bonds. An ETF can't do like an ATM like we could do, and an ETF can't buy Bitcoin with cash flows. So we have a lot of flexibility as an operating company, and we don't charge that fee. So we have $4.5 billion of Bitcoin, but we don't charge $45 million a year. And so the real idea here is, what if I created an investment vehicle that paid you a yield instead of charging you a fee? And what if I was able to borrow money at 1.5% interest? I borrowed $1 billion at 0% interest and bought Bitcoin with it.
Insane.
So if you were if you were pro Bitcoin, let me give you a theoretical. If you get a 2% yield instead of paying a 1% fee, it's 60% difference over the lifetime of your asset. So, right. So if you have $1 billion invested and you're getting a 2% yield, right, you're actually picking up $20 million a year, right, instead of paying $10 million a year. So the dynamic of the company is very important. So you can imagine that if I don't charge you a fee, and if I have cheap leverage, then the benefit accrues to the common stock shareholders, right? Because I went and I borrowed $2.2 billion at 1.5% interest, and I bought Bitcoin with it. So what's the logical theoretical yield of Bitcoin? Is it more than 1.5% a year?
Well, I really
let's say
hope
it was.
I really hope so.
If it was 15% a year, then we're scraping 14% positive real yield off of the debt, and so that would be 14% of $1 billion dollars or more. Actually, 14% of $2.2 billion. So that would be $300 million a year that accrues to the benefit of the common stock shareholders. You see, so let me make this.
You took advantage of the low interest rates when the low interest rates. I mean, in the low interest rate environment, as you say, you took $1 billion worth. At today, at rates, at yields where they are today, are you still as confident to take the bet?
Well, so this is the benefit of being an operating company. Every quarter, we can choose what to do. So some quarters we would issue junk bonds, other quarters we would issue convertible bonds, other quarters we would sell the equity, other quarters we would just use our own cash. So the answer is there's always going to be a good market, and there's always going to be a bad market, right? There are things you shouldn't do, and there are things you should do. So MicroStrategy, to make a long story short, is a bit more complicated than a spot ETF, right? If you want something plain vanilla and simple, that it should basically correlate 1-to-1 with Bitcoin after you pay the fee, then you buy a spot ETF. But if you wanted to actually try to outperform Bitcoin, Like MicroStrategy's outperform Bitcoin. Our performance over the course of the 3 years is higher than Bitcoin performance. So if you want to outperform Bitcoin or outperform the spot ETF, you would do that by accretive financings. Like, for example, if our stock trades at a 30% premium to the underlying assets, and we sell $1 billion of equity, we actually capture $300 million of accretion to our shareholders, you see.
Michael Saylor shares his expert insights into Bitcoin's future, and it's becoming evident that we stand on the verge of something extraordinary. With the upcoming FASB accounting changes and a highly awaited Bitcoin halving event, it's a reminder of the saying that the best time to plant a tree was 20 years ago, but the second best time is now. This adage might also hold true for investing in Bitcoin, especially given the current circumstances. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.